So we are done with the costing examination, moving on to the audit examination, and it's important to utilize the time properly, especially for audit. You have to cover a lot of things. So to make sure there is a smooth transit and to ensure the switch between costing and auditing happens, we're directly starting the index mapping. Pranati, you have the index mapping with you?
Yeah, first chapter, nature, objective and scope of audit.
Yeah, I'll tell you. So you're ready to do that. I appreciate it. So basically the idea is to ensure we move into the auditing mode before we reach home. And once you are done, I believe you also have the 20-hour strategy with you.
Yes.
Hurry, have a quick look. Give one to Sharthak as well. So one for me. Okay, so this is a 20-hour strategy. Now, the idea of this is on day one itself, you'll be covering 25 to 30 marks. So that exactly is the objective. Before we get into that, we are trying to cover a few chapters of index mapping so that in your mind you can switch the context. The first chapter which you are going to do is audit of items of financial statement, followed by chapter 1, chapter 2. So these 3 chapters alone will give you 20 plus marks, and also the ethics and terms of engagement at the end of the day is easier and lighter. So total 25 plus marks you'll be able to cover today, including the index mapping. Okay. So Pranati, now get started. Focus on the keywords. Don't say what they already know. Don't talk about general English. Specific keywords. Do it at 1.5x. Go ahead.
Okay. First chapter, nature, objective and scope of audit. Meaning of audit is an independent examination of financial statements done to form an opinion, to express an opinion on the financial statements. And objectives of audit is to obtain reasonable assurance and to report on the financial statements. What is scope of audit is reliability and sufficiency, coverage of all aspects, and proper disclosure of information of financial statements. What are inherent limitations of audit? It's the nature of financial reporting, nature of audit procedures, and nature of investigation. What is an engagement? It's a formal agreement between the auditor and the client. And benefits of audit provides high quality information and provides degree of confidence to internet users. Whether audit is mandatory or voluntary, it's not always mandatory. And who appoints the auditor? Auditor is appointed by the shareholders or the person or a government CAG to whom the report is submitted by the auditor, to the shareholders or to whomever the appointment is made or engagement is made. What is assurance engagement? It's a practitioner expressing an opinion to the users of financial statements to enhance the degree of confidence. And elements of assurance engagement is a three-party relationship with sufficient appropriate evidence and meaning of review and audit versus review. Review is a limited assurance engagement and audit is a reasonable assurance engagement. Types of assurance engagements, it's
Sharthak, what's the difference between limited assurance and reasonable assurance?
Like in limited assurance, we work as per the company's instructions. Like company asks us to provide interim financial statements. They can give quarterly financial statements and ask us to review them, and limited assurance they want. But in case of reasonable assurance, like we perform every audit procedure according to the standards on auditing and obtain the reasonable assurance.
What about the difference between reasonable and absolute assurance?
Sir, reasonable assurance is the high level of assurance which is given by the auditor because auditor cannot give absolute assurance and limited assurance is one level below the reasonable assurance.
Fair enough. Okay, now let's quickly switch on to audit of items of financial statements. We'll finish the index mapping in the car itself and we'll do the actual preparation once we reach home. So when you talk about audit of items of financial statements, what's the most important thing that comes to your mind? What should you focus on?
Assertions.
Okay, so I want all of you to define assertion in single word. It's a very important definition. So what do you mean by management assertion? Quickly, whatever.
So my representations made by management to the auditor.
Sharthak, I want you to operate out of your mind. It's a blank page anyways. So yeah, what do you mean by assertion? This is just to recall.
Assertions means representations made by management regarding the completeness, existence, occurrence, and accuracy of the assertions the management make.
No, come again. What are assertions? I'm asking you, what are management assertions? What do you mean by assertion? Define assertion.
Assertion is an item of financial statement represented by the management.
Ariba, what are assertions?
Sir, assertions consist of account balances, classes of
What are assertions? What do you mean by assertions? Pranati?
So it's a representations made by management.
Okay. So what do you mean by representation?
Representation, it's a giving information about the account balances.
Okay. Can you name some assertions? So this is very important. I think unless you get the essence of this, it will become a bit difficult. So when I say assertion is a declaration. Let's say when you're talking about account balance, if you say plant, property and equipment, let's say 10 crore. Now management is saying we have plant, property and equipment worth 10 CR. Now as an auditor, for you to verify the assertion of assets, what is it you have to verify regarding assets?
Existence,
Right.
ownership, rights and
Absolutely.
controls.
So yeah, so this is exactly how you have to look at it. So fundamentally, every item of financial statement is an assertion saying I'm declaring this because this is around numbers. When I say 10 CR, you have to go and check the actual existence of that. So similarly, you have other assertions, right? So that is the direction in which we have to continue the discussion. So what are the other assertions?
Cut off.
So cut off, how does it become? It's not exactly an assertion, but yeah. So can you give an example of how you can look at cut off?
appropriate period.
The value and whether it's appropriate and valuation.
When would valuation come into picture? When would valuation come into picture?
Whether the inventory were exactly valued or not.
Okay, so now I want you to finish the brainstorming and thinking before we reach home, okay? So with this context, there will be at least 12 plus marks in this direction, okay? So you have a blank index, it's good for you. You just only have the side headings, you have to think about the solutions. You can work on this. Ariba, you also think through this thoroughly and will directly execute it, then we'll take a break. Okay, is it understood?
Yes, sir.
So think about it completely. Chapter number 5 is what we're completing, 12 marks.